Checking in with the price of oil, the cost of crude at the moment is up more than 2% at $48.17 a barrel. And crude is on its longest winning streak since August. The most recent gains coming as the production cuts promised by OPEC took effect on January the 1st. Joining us now, the Schork report publisher, Stephen Schork. Stephen, what is the direction of oil, you think, in the next 3 to 6 months?
Well, at this point, Dagan, we've had a nice rally in oil, thankfully. But my concern here is this is similar, or not dissimilar, to what we saw in September. In September, we had a nice rally in crude oil, a bubble, as it were, as the pigs on Wall Street came in with the speculative money, bidding oil prices higher in anticipation of the No. 1 reinstatement of sanctions on Iran. And of course, my expressed concern back in September was that if we were going to see a pullback in oil prices, we were at that point in the season. That is to say, we were in the midst of fall turnarounds, so refineries in North America and Northern Europe were buying fewer barrels of crude oil. And that's exactly where we are right now, Dagan. The run-up in oil prices is not unexpected. You typically see as new money in the new year comes into this market. But as we look ahead to the month, 2 months ahead, refineries once again in North America and Northern Europe will go into their late winter turnaround season. So once again, we're going to see a fundamental decline in crude oil prices. So that said, I would expect that to add a headwind to the bull run over or through the end of the first quarter. Okay. However, once we get into April, demand will start to come back into the market. Yes.
So, Stephen, it's Deirdre. So to what extent, then, are you worried about sentiment? It doesn't sound like you are, as far as oversupply, right? Because the U.S. is as close to energy independence as we've ever been. Russia's producing more. Sure. We saw that API data, which showed that U.S. crude levels fell. So I felt like that was a big theme in the second half of 2018, this concern about oversupply. But now you're saying, obviously, Absolutely. With OPEC's moves, that's been put into check?
Well, here in the United States, what we have now is absolutely inventories here are quite comfortable. Keep in mind that in the month of December, we normally see a large decline in crude oil prices, and this has more to do with end-of-year cost accounting tax impact. Therefore, we do see that decline. And then we do see a rebuild come January and February. And as you mentioned, the API reports, yes, last night they reported a 4.5 million drawdown in crude oil prices. That's quite normal, so that is not supportive of the market. More importantly, we saw massive builds in the products, gasoline and distillate fuels. And to your point, U.S. oil production is at record levels, and it's going to remain at record levels because they had all of the first half of last year to lock in future prices when oil was well above $70 a barrel. So U.S. crude oil production will continue to hit the market. Russian oil output will continue to hit the market until we get the Siberian thaw later in the spring. So don't expect to see any sort of material decline in Russian oil production until the start of the summer. So that does set up this scenario as those Russian barrels are pulled out of the market and demand returns to the market. My overarching concern, Deirdre, right now is the economic development. As was reported in the last segment, Tesla put 150,000 new Model 3s on the car. That's 150,000 cars that don't consume gasoline. And it's not just Tesla. Porsche, Audi, BMW are all coming out with their all-electric vehicles in 2019. So the inelasticities of demand in this market are fundamentally changing at this market, and it's moving away from lockstep impact on the demand in the market. So that is the overarching concern. As far as prices go, yes, we are at fundamentally the bottom of the market because we are at the lowest marginal cost of production for oil production. So I do expect support to hold here, but I do not expect to see a material rise. That is to say, the $70, $80 barrels that we saw last year when we couple the impact of inelasticity demand shifts along with, let's be honest here, concerns with regard to demand, whether it's the PMI, ISM, rash of disappointing reports, or the inversion along the yield curve over certain maturities. There are some headwinds going into 2019.
Stephen, that you covered so much ground for us. That was awesome. Stephen Schork, thank you. And I will say this. People dismiss these electric cars until you test drive one or get behind the wheel of one, Stephen. And the torque is incredible. And the driving experience is not, is just as interesting. It's different than a internal combustion engine, but it's a really great driving experience. And you're right. I think people are overlooking that. And thank you for pointing it out. Absolutely. Electric cars, a Porsche Electric. In the new year. Coming up. Thank you again.